Good evening. Welcome you all to this monthly webinar of Almus Risk Consulting. And this is the 7th episode of season 2 of monthly webinars. I am Jayaram Krishnamurthy, co-founder and head of research and advisory at Almus Risk Consulting. Most of you might be knowing that our company has been in the business of providing risk management services in currency, commodity, and interest rates to corporate. And apart from our usual services, we are conducting these monthly events to disseminate analysis and information from experts in relevant field on events and policies that impact your businesses and the market risks. Now we are very close to US elections on November 5, just 12 days away, and that's one of the most important quadrennial political events with global implications. And needless to say, US policies on geopolitics and economics, which the world cannot ignore, is likely to see a refresh or even a reset post November 5. Now, to talk on this upcoming global event, we have called experts on today's panel, whom I will introduce shortly. Now, before that, let me set the context. It's not in the scope of this webinar to assess the prospects of the candidates in contention who will win the elections, but clearly to familiarize ourselves with the unique election process in the US, peep into the possible scenarios for economy and the markets under both the candidates, specifically see where the various markets stand technically, whether we are in the cusp of any major trend change, and finally to determine the specific implications for Indian markets due to possible policies of the two presidents with quite different ideologies and approach. Now, in this, regard, I would like to, just show a few slides. Okay, so this is, look at the Democrats and Republicans' performance over the years. If you look at, this is kind of not a usual indicator that you will get, but it is the sum of the unemployment and inflation rate, where the Democrats have actually achieved, at 9% versus the 9.5% of the Republicans. Not much to choose between the two. And then if you look at the stock market performance, mean performance of Democrats is slightly more than the Republicans. And of course, the median Republicans score over them. But where everybody is on the same boat is the increasing debt that the US government is running, which is now hitting almost 36 trillion. And as I understand, more than 5% of the GDP is being spent only on interest cost of maintaining this debt. And of course, the deficit, which is also touching almost 2 trillion, we are near about 1.8 trillion for this fiscal year as well. Now, to see how, this new government is going to approach, the current economic situation and what implications that will have, we have two eminent panelists with us, and Mr. Indranil Pan, who is currently serving as Chief Economist at Yes Bank Limited, is one of them. He has a master's degree in economics from Jawaharlal Nehru University, New Delhi, and a post-graduation diploma in development economics from the Indira Gandhi Institute of Development Research, Mumbai. Most of his 29-year career has been spent in the banking sector as an economist role. Before joining Yes Bank, he had worked with Kotak Mahindra Bank for 14 and a half years and with the IDFC First Bank for 5.5 years. Indranil serves as the co-chair of the Economics Advisory Committee of the Bombay Chamber of Commerce and Industry. He is a member of the economists panel at FICCI Associam and has many authored articles to his name. Welcome, Indranil. Glad to have you here.
Thank you very much.
We also have our own Mr. Mathew John, with whom most of our clients are quite familiar. Mathew has been with Almus and its earlier constituent Prime Forex for the last 22 years. He now heads the in-house technical research team in designing strategies for our trading and advisory clients. He has a BTech in industrial production, CFA, and a master's in foreign trade. Of course, he also has completed courses on time series analysis, data science specialization, and machine learning for investment management. He is highly sought after by various corporate treasuries and brokerage houses for his technical views. It's great to have you, Mathew, here in this webinar. Now, I would now consider calling Mr. Indranil for his opening remarks on the subject, and then we'll go on to Mr. Mathew for his remarks. Thank you.
Thank you, Mr. Jayaram, and welcome to all the participants, the people who have joined into the seminar. Now, today what we are actually doing is dealing with a very complex topic. And as a macroeconomist, it becomes sometimes very difficult to choose sides in terms of trying to determine what the election process in US, and as Mr. Jayaram has rightly pointed out, would have wide-ranging sort of implications for the not only the global financial markets, but also could have implications for the domestic economy. The electoral process is very difficult to understand, no doubt, and I believe Mathew has taken great care in terms of he'll be taking you through the election process that is there in the US at this point in time. So my job and my role is to restrict myself to mostly the economic perspectives and how I therefore see the overall landscape evolving out of this most interesting phase that we are in, which is basically the US elections. Now, what are the key sort of things that the electorate is looking at this point in time, and why, therefore, one might be tempted to think that there would be a change of guard Republicans, and that is possibly what the voting pattern, or rather the polls that are emerging in the US are also to a certain extent predicting a Trump win rather than a Kamala Harris win. Now, what are the electorates looking at? First, I think the most critical issue for the electorate is obviously the economy, and that is the most important issue in front of the electorate at this point in time. Surveys also do indicate that voters are concerned about the cost of food and the consumer goods, something that we have been seeing the Fed really worrying about, and once that has been more sort of addressed, they have also started cutting interest rates. The third issue that people worry about is the cost of the housing. So there have been specific policies that the two presidential candidates are laying out in terms of trying to address even this. Now, in terms of, there are some research surveys also that sort of tend to highlight who has been relatively doing better in terms of economic policies, or rather what is the electorate's choice if we were to look at economic policies, for instance. So there, I think clearly Trump is the winner, with about 55% of the electorate saying that Trump could actually be better at making the right choices in terms of the economic policies, against 45% for Harris. The other issue that clearly emerges to be very strong sort of issue during this election process is that 57% of Americans also consider that dealing with migration is a top priority, or rather should be a top priority of the president as well as the Congress. So what are the broad sort of policy agenda that either Trump or Kamala Harris is looking at? First of all, I think Trump is proposing big tax cuts, both across the business and the households. And a proposal of corporate taxes cuts are, however, not across the board. So I think once people start understanding this and try to talk about the fiscal implications, there can be quite a debatable issue, in the sense, first of all, the cuts in the corporate taxes are not likely to apply to the whole gamut of the industry, and may only sort of apply to companies that possibly focus their manufacturing perspectives within the US. So that is, I think, very important. The other way of looking at it is, if there are corporate tax cuts, and if this holds up, the economy per se, along with other economic policies that the various administrations may be looking at, it may also have a beneficial input into the fiscal. So that's also very relevant to understand when we understand these policies, and therefore a blanket statement would be very difficult. The second, of course, is and Trump is known for this in his first sort of avatar, the tariffs that he had raised against China, and he is intending to raise tariffs further. Now, importantly, if I look away from Trump and into the Harris administration for the last 4 years, nothing much has changed. So when we had Trump introducing these tariffs, we had a huge hue and cry, and we had talked about all tariff wars. But if I look at the Biden administration has broadly carried forward the tax structure that was, or the tariff structures that was laid down by Trump. And now Trump is actually planning to increase the tariffs more. First of all, he is willing to, or rather talking about 60% tariff minimum in China, and also 10 to 20% tariff across the other broad economies. I'll actually come back to this in more details, because this has a serious implications in terms of how we look at the whole structure emerging in terms of either the sort of revenues that the administrations are likely to garner, or even in terms of the inflationary implication that we talk about. The third big issue that Trump is raising is reducing the migration and deportation of illegal immigrants. Now, this also to a large extent has implications for policies, or rather the policies would have implication on economic sort of behavior of not only the US economy, but maybe across various economies of the world, including India. Whereby if there are tightness, or if there is a certain amount of tightness that comes through in terms of H-1B visas, etc., and also student visas, that could be having some implication for the Indian economy too. On the other hand, what Harris is targeting is prioritizing the tax cuts on low and middle income workers, and also small businesses. Here also, it is not a blanket tax cut that that Harris as president is. It would be only for people earning less than $400,000. So that is where the consumption bias, or the boost in terms of the consumption, and therefore the economic sort of upwardation can actually come for. I did talk about one of the objectives of the electorate in terms of the home costs, and one of the Harris's policies is likely to target some support for the first-time home buyers. And further, quite contrary to what Trump is talking about, Harris is actually wanting to raise the corporate tax rates if she becomes the president. Now, the whole sort of argument, therefore, boils down to what is the type of economic implications that we might have. But before I step into the economic implications, I think it is possibly well understood that given the huge divergence of policies that, or rather extreme policy ends that either Trump or Harris is looking at, it could possibly be a better scenario if, for the markets at least, if there is a split Congress, which necessarily means that none of the entities, whoever becomes the president, would have an easy passage of the policies that they can be talking about. But having said that, I think the one factor that I have been reading is that most of the tariff-related policies that Trump had raised against China in his first avatar had been more executive sort of instructions, and therefore it does not need to go through the Congress. So this is something that he might still well sort of manage if he becomes the president, and a Congress vote might not actually be essential for the tariff policies, but we'll have to see how it evolves. So basically, what are we talking about? First, I think if we look at the tariffs, the very argument that I am raising tariff necessarily means that the cost of imports is likely to go up. Now, there is a slight difference in argument in the first avatar and in the second avatar as Trump is looking at. And here is the crucial difference. In the first avatar, Trump had been more harsh against China. And therefore, there were a lot of other economies whereby there were no tariffs that were raised, and which necessarily meant that there was a substitution effect that happened, which necessarily led to people importing from the countries where there was no tariff, and hence there was possibly not too significant an implication in terms of the inflation risks to the economy. However, in the current scenario, as he is talking about the tariff policies, he is not only wanting to raise tariffs on China at least to a 60%, but also raise the tariffs in other regions of the economy, which necessarily means even though the substitution effect might happen, and people might actually look to sources of imports of raw materials away from China, it could still have an economic implication in terms of higher sort of inflation in the economy. So that's something that we need to sort of remember. The other problem, therefore, is Trump has also been quite open about the fact that he wants the Fed to reduce the rates, but he has also, at certain instances, talked about the fact that he wants to reduce rates. He wants the Fed to reduce rate only after he comes into the presidency. So the dichotomy here, or the confusion in terms of the argument here, is on one side we are looking at higher inflation, and on the other side we are talking about a president who is likely to sort of target reducing the rates, which necessarily is a huge contradiction, and therefore there can be some sort of question marks that can be that can emerge on the independence of the central bank in the US in terms of trying to do the right thing to manage the risks in the economy. So this also sort of becomes important, and I think it's something that we will not be able to realize on day one. It is something that we will possibly be able to only sort of understand as the presidency in terms of the number of months and the years sort of traverses. But it remains a very important perspective for the market any which ways. Second, in terms of the immigration policies, if Trump is wanting to throw away or deport a significant amount of migrant laborers, and there is a tightening of immigration laws both from the Trump side and the Harris side, and also Trump gets back into the same mode of the Mexico wall and stopping of the passage of immigrations, that could have implications in terms of the overall productivity in the economy, and that could be another factor that could be leading to a relatively higher sort of inflation. Now, if I remember correctly, Fed's Powell had also indicated that the recent period immigration being on the higher side has also enabled the Federal Reserve to be able to sort of reduce the tightness in the labor market, and therefore see a lesser pace of growth in terms of the wages, and therefore has enabled to a certain extent in terms of managing the inflation risk in the economy, and ultimately leading to the reversal in the restrictiveness of the Fed policy. And this therefore stands at a significant risk if migration is to a certain extent restricted. Now, putting the tariff and the migration together, I think it would also have a severe implication in terms of the productivity of the economy, which necessarily means that in a situation where you anyways have an aging population and your workforce is actually coming down, if I have these exogenous factors which is controlling productivity or which is reducing the productivity in the economy, it could actually sort of lower the growth potential of the economy, the US economy, and that could also have implications in terms of the broader implications in terms of the financial markets as we look at. So the point that I'm trying to make is that if the economy generates an X amount of GDP, and in a situation where there is an aging population and the dependency ratio is actually increasing, the economy will tend to save more for to sort of feed the older population rather than invest, which also means that there's a fiscal implication to it. But having said that, I think when you do that, and when your investments are lower, anyways it reduces the productivity, and therefore you have to tend to look at things like a competitive advantage, and also the migration of labor to help you as a country with in terms of the productivity, and therefore this could altogether can have some implication in terms of the inflation risks to the economy. The fiscal, of course, is likely to go from bad to worse in the US as we speak, and whichever presidency you look at, whether it is Trump or it is Harris, will actually weaken the fiscal. Now, if I were to sort of read out some of the figures that I have been collecting, the fiscal in terms of the Trump's case, and this is basically the central line. There can be a wide range around this. In terms of the Trump's case, the worsening of the fiscal over the next 10 sort of years scenario could be by about 7.5 trillion. Harris policies could actually weaken the fiscal by about 3.5 trillion, which of course has its implication in terms of the overall debt or the sovereign debt in the economy. Mr. Jayaram had already indicated that within the fiscal there is a huge amount of burden that is there in terms of repaying the previous debt, and that could actually sort of increase. But having said that, I think the critical issue here is that you will not really see any of the president actually talking about the fiscal perspectives. And my sense here is that probably they are hoping that growth either sort of stands in order, or there is a higher inflation, and hence the implication in terms of the fiscal and the repayment capacity of the economy because of the higher inflation could actually be relatively lower than what we are anticipating at this point in time. That could be one way of looking at it. And the second way of looking at it is that future population will actually pay for the cost that is raised in terms of the debt, which from a political perspective, because every politician has about 4 or 5 years to sort of look at the issues that are there at that point in time, would possibly be relatively less bothered about debt and the repayment capacity of the economy. And very honestly, yes, that is not the perfect macro strategy from any political leader, but that possibly is how it is in the current scenario. Just to close my comments, basically what therefore in terms of the financial markets I would personally look at is that the whole issue of US exceptionalism sort of coming back. First of all, raising tariffs necessarily means that US currency needs to be firmer. It could actually significantly hurt Chinese currency and also the Asian economies, the currency of the Asian economies, including India, as the dollar tends to remain a stronger currency. So that is one sort of side of the story. A higher fiscal also possibly implies, and I believe Mr. Mathew will also sort of take you through some of these scenarios that are there. But broadly, a broad brush sort of ideation here is that a higher fiscal, be it a Harris or be it a Trump, it may be in different doses, but a higher fiscal and a higher debt could possibly raise the risk of the longer duration bonds going up in an atmosphere where also the Fed struggles to actually lower interest rates. And if the Fed independence, however, is actually lost, then actually this could lead to a severe sort of a risk aversion in the global financial markets, which necessarily once again means, and because the US currency is still the number one currency of the world, both in terms of a store of value and also being one of the most significant trading currencies, the risk aversion could actually continue to lead to some strengthening behavior in the dollar. To a certain extent, I would be hesitant of talking about significant depreciation pressures of the currency, because the sense is that the depreciation pressure possibly comes if US is doing not too good, while other economies are possibly doing better. A scenario that possibly I am not being able to look at in a situation where we would be talking about sort of tariff barriers and immigration barriers being sort of raised, which necessarily means that there could be a deadweight loss for the world as a whole, and that could have implication in terms of the overall growth in the world economy slowing down, which necessarily is a scenario that I am possibly not being able to look at in terms of a scenario for a depreciation of the currency. So just to reiterate this, we are definitely not looking at a scenario where the US does better and the rest of the world sort of does badly. And we are also not looking at a scenario where the rest of the world does better and US does badly. It has to be, in my opinion, if some of these policies come through, it has to be a scenario where the whole globe suffers, and if the intensity of the tariff and the tariff war picks up, it could have some severe implication in terms of the overall growth and productivity of the economy. In terms of the Indian currency, I think I've already sort of to a certain extent indicated that we should be looking at a depreciation bias for the Indian rupee. Yes, of course, the Reserve Bank of India is sitting with a huge chest which can fight speculative attacks on the currency. But if the rest of the Asia currencies are depreciating, I am not sure whether RBI would be anyways interesting in stopping a depreciation pressure of the domestic currencies. Anyways, my given the overall sort of growth perspectives in the world, we are looking at current account balances to be relatively weaker for India in the current financial year than in the previous financial year. And we have also sort of seen some amount of significant sale that have been happening in the equity markets, which also necessarily means that not only the current account deficit is likely to be wider than in the previous year, it could actually sort of raise question marks in terms of the extent of the balance of payment surplus that we would possibly be carrying with us in FY25, which is another reason why I think that the currency should be depreciating. So thank you very much for this opportunity from Almus. I would be stopping here and hand it over back to Mr. Jayaram.
Thank you, Indranil. That was a very comprehensive look at the macros of the US economy and the implications of different regimes. What I get from you is Trump, if he is re-elected, would be kind of inflationary in his policies overall, a stronger dollar. And in case of Harris, probably it will be more of a socialist and a kind of continuation of Biden policy. Only one point we would be interested to look at is, I think Trump is probably less averse or more averse to entering into geopolitical, intervention, or he would his policy lead to less of U.S. involvement, and then probably even Ukraine, which is getting a huge support from U.S. Is that war likely to end? What is your view on that?
Yeah, so I think again it's a very difficult call to take, in the sense that one thing the Trump administration had been saying, and even in his previous avatar, is reducing the fiscal or rather financial support to the NATO. So that's one sort of issue that we want to look at. But if I really look at the way Trump is talking at this point in time, at least, that in one stroke of the brush, he will be able to solve the Russia-Ukraine problem and also the Middle East problem. So that is something that people are hoping for and wishing for. But I'm not sure if that would be as easy as he talks about. So I think the challenges globally, in my opinion, can continue, given the fact that we are also looking at, from a broader perspective, deglobalization and non-cooperation between various regions of the world. And therefore, the moment you have the economy slowing down, escalations in terms of such skirmishes can actually continue to happen. The other issue, of course, Trump would also have to, or any president would have to deal with, is the China-Taiwan relationship. So that's something that we have been talking about for some time, but we have not really seen any escalation over there, and that's something that that needs to be understood. So again, the whole sort of whole spin out of this is also how we look at the commodity prices. Now, what we are sort of thinking, therefore, is that it's very difficult to see geopolitical risks and it's sort of the risk aversion out of the geopolitical issues on the financial markets may not go away. And that also may actually favor dollar strength going forward, and sort of say a significant upside in terms of, say, the precious metals that we have looked at. And oil is again a very difficult bet because it also depends significantly on China and China's fiscal policy and how effective it is.
Thank you, Neil. Thank you, Neil. Let me turn to Mr. Mathew now. Mathew, US elections process is kind of complicated. It is quite different from other republics. And can you just familiarize our audience with how the process goes on, and is it a two-stage election, and what indicates that there is a clear mandate, please?
So I'll put a few slides on that, and let's start from there. So this is the broad picture of the US elections. It starts almost a year, before the November 5 or first Tuesday of after the first Monday of November is where then the election should be. And these are all things which have been coming from the last 200, 300 years of history. And the election is complicated because America has a history and the country is very vast. There was a big divide between the North and the South. They had the whole, the revolution, the War of Independence. After that, they had the Civil War. So it's all structured in such a way that there has to be some cohesion. So that cohesion and the timeliness of the election process is why they have this long overdue process. And the Constitution of America is a very small document. It's hardly 4-5 pages. And the amendments are even bigger. The amendments are 27 amendments. The first 10 is called the Bill of Rights and all that. But point is that it starts from the previous December, and people who want to be, and political parties are not anywhere said in the constitutional document. So it's a process that actually got gelled into the what's called constitutional process of deciding who is the president. The executive is divided like in India, the judiciary, legislature, and the president. The president is the executive, and he is the commander-in-chief. He has all the powers, but substantial veto power is there with the legislature and the judiciary. Just like in India, we have the constitutional, the Supreme Court, which can, of course, in line with the Constitution. Now, here what happens is that they initially have all these people initially there was no Republicans and Democrats. There were all Federalists and all that. James Madison, George Washington and all that. Then after, I think, Andrew Jackson came the whole democratic process and the age of the democracy. When that came, we have this Democrats and Republicans fighting. And I think the first Republican was Abraham Lincoln. Of course, we were short and all. Now, coming to the process starts with what they call as a primary and a caucus, where people who are interested to stand as president, they debate and they put their views forward. And there are other people who are registered and non-registered. Depending upon whether it's a primary and caucus, they have a process where they will have to, even the caucus is like a closed front thing. And the primary is any registered or unregistered Democrat can go and vote. And once that happens, then they will have it all, no holds barred debate and all that we see in with Trump and others and all we saw in TV. That process comes in, and when it comes to finally it comes to, from the primaries, it comes to the Democratic Convention or the Republican Convention, what they call the DNC and the RNC. That is where the final candidate is decided. When the final candidate is decided, then all the delegates, the other delegates, they pledge support to them. For example, Biden had 1,214 delegates pledging support for him, and that he transferred it to Harris. So they were pledged delegates. That means they cannot cross vote to another candidate. So they had to transfer the vote to Harris, and that acts for his campaign funding also. Now, coming to the American process and the Indian process, the biggest difference is that it is that they're having an electoral college. So each state will be electing one person. So if and how many votes? Even if he wins with one vote, that person is going to vote for the president and the vice president, who will be Democratic or Republican. So normally, if Democrats win, they will vote for the Democratic president or the Democratic vice president. So that's how it is. And most of America, like for example, if you go to the south, Kerala and Tamil Nadu, you cannot have, at least you cannot, you would not have now as NDA coming in. So it's like the state will be with the India alliance. The same way, the coast of the Americans, the east and the west, and of course the areas around the Great Lakes, those are principally Democrats. Those are college-going, highly educated kind of people. I'm not, siloing it, but it's something like that. That they vote for Democrats. And the middle of America, which is conservative, may not be college-going. They were kind of white. No racism, but I'm just saying those are the traditional Republican supports. No, as of today, you have around 226 electoral votes almost decided for the Democrats, and around, I think, 209 vote for the Republicans. So what remains is these black states that we are seeing. These are what is called the swing states. The swing states is where the voters are undecided, and any small variation can change it to the other party. So this is, for example, last year in Georgia, Biden won by just 11,000 votes, but the whole 16 electoral seats will go to Biden. And these electoral seats, each state will have different numbers, which is actually the number of, it is proportional to the population, but it's the number of senators plus the number of congressmen. So California has 52 congressmen and 2 senators. So their number is 54. So that's how it comes. Now, coming to the 6, now as of now, we don't. I think I've lost one slide. Sorry. As of now, we have 7 swing states. These swing states have not decided yet. Although it has been the polls that we are seeing is showing that the Republicans are leading and all that. That is all the betting markets. The betting the betting market is different from what is a normal poll where they telephone people and ask. Now, as of now, and any president who wants to has to win will have to get at least 4 swing states. As of now, it is 3-3, but now the prediction market is saying that it is 4 for Trump, which is, I think, North Carolina, Georgia, Nevada, and Philadelphia. Pennsylvania. So Pennsylvania is the 3 battle state. If you look at campaign of Harris and Trump, it is in Pennsylvania that they are all camped up. You see an Indian couple being given a McDonald's by Trump. All that happened in Pennsylvania. They're trying to attract, and these are the people who are not. And important thing is that 1% swing that this prediction market is giving, or even the pollsters are giving each party, 24% are still undecided. Normally, they decide into that October phase, which is called an October surprise. Something strange happens. We already had the surprise previous month because the Trump was, almost assassinated. So that could be one reason. And at that time, Trump surged ahead in the polls, but then Biden gave way to Harris. Harris, as being a woman, has a pro-life, tilt, which will make women vote for Harris. So that is, and there is another concept called the early vote. In 2004 or before 2004, there were people we have this postal ballot thing where government servants can vote. Same way, America, there was that postal ballot thing that is called an early voting for mail-in vote. But now that mandate after COVID has increased. So almost, I think, around only 3 states have no excuse mandate. This is like a no excuse mandate where people can around 70 or 80% of the population is covered by that. So you can vote by mail-in. Last presidential election, 2020, it was like the Democrats were more going for the vote-in. But this time that is different. That time Republicans were actually anti-mail-in. So what happened is that now it's very difficult to even predict whether I think 60% of the vote is already being cast in America. So it is only that the later one will go on the voting day and vote. And in that, around a big percentage of will be voting on that day. I mean, making their minds on that day. So it's a very close race. It is not going to be something which, as the pollsters say, Trump winning by a big margin or anything. It is just that the tilt or the of the prediction market is, we had, I think, in our election had a big tilt towards one party. So same thing, perhaps that is the kind of bias that is built in because of that. And and another thing is choosing the House of Representatives and the Senate, the bicameral legislature that they have. Even that is kind of split. So as of now, it is looking that the markets are pricing in different scenarios, different sets of markets are pricing in different. The gold market, the precious metal market is thinking something big. If yields rise, then why is gold rising? So different markets are poised in silos and thinking and pricing in different scenarios. So I think I've basically covered it in a small time first.
Okay. Thank you, Mathew. Thank you for that, painting the picture of US election process. Just that, 2016, I recall there was, huge bias that Hillary Clinton will be elected, and the result was a total surprise. And this time, at least, there's going to be no total surprise because market is equally divided. Polls are also equally divided. So I think that way it is.
So there is another possibility. Sir, one more possibility is that since this is very tight, it can also happen that it can be a tie. So we have the winning number is 270. So then there are 538 votes. So why don't it split that 269 each? Then what happens? So we are not priced. The market is not pricing it now. As of now, what is pricing it is Trump will win by 281, just 2 votes. So what happens if it is divided equally? So if the permutation combination in the swing states happen, that it will then what happens? So then there is a process. It has happened actually because there was a third candidate. Normally they used to have a third candidate centuries ago. So if the third candidates come and nobody crosses 270, then what happens is the House of Representatives will decide who becomes the president. And another twist to the tail is these are the gray swan area or the black swan areas that. And another twist is the vice president will be decided by the Senate. So if the House of Representatives is Democrat and the Senate is Republican, then the president and the vice president will be different parties. Okay. So a lot of combinations are there. And the third thing is that because it will be very tight race, Trump has already said that he will go for legal process. If he goes for the legal process, we will see what exactly happened in 2000 when Al Gore and George Bush had to do it. And the Constitution, the Supreme Court will have to decide on that. That will take a lot of time because everybody has to put evidence, all that, and it will take a long time. In India, the Election Commission at least give a final word by the evening of the next day. But this won't be that. They will wait for the Supreme Court, the Circuit Court, the Supreme Court, all will have to intervene, and it will be a long round process. And markets are not prepared for these kind of scenarios. Market is kind of Trump plus divided Congress or something, and is happy. That's why we are seeing now the Trump rate moving up. All M7 is going up, Tesla moving up. Some results, of course, the results were good, but then the Trump rate is the Magnificent 7 moving up, and there is substantial concentration risk because of that. Yes, sir.
Yeah, thanks for that. Indranil, I think the very next day after the election, we are having Fed meeting on November 6th, and US economy has already been giving mixed signals. The unemployment rate has been above 4% after remaining in mid 3.6, 3.7 for a year or so. Non-farm payrolls were revised, and then so much so that even Fed got a bit concerned about growth. They were confident about inflation. Now, when he meets on 6th, Powell, what additional thing he will look at from the election? Is there something that is going to influence his decision, or it's going to be a tough call for him? What do you think from the FOMC? I think you're on mute.
I think to a certain extent, what the markets were pricing in, you are right in pointing out that the market has now lower pricing for the depth of the Fed rate cut, at least in the current calendar year. So I would sort of like to think about a 25 basis points rather than a 50 basis points, which they had been talking about. Yes, there has been relatively the story on the U.S. economy is that it is relatively much firmer, and therefore they are likely to go into a soft landing. So, since I think the Fed meets immediately after the election, and as Mathew pointed out, there can be huge amount of uncertainties. So it's a very difficult call for even probably Powell at this point in time, and he would possibly not be able to make up his mind till the very last moment, even agreeing that they are data dependent. So there could be an outside risk also where they might actually tend to be on the sidelines, and therefore a 50 and a skip, and then possibly they will possibly once again do it in December once the trajectory of the economy and the overall growth inflation balance becomes clearer, and that to a certain extent will have possibly an implication out of who is the likely presidential sort of candidate that comes to the front. So yes, I know I'm not answering your question directly, and I'm sort of trying to beat around the bush, but that is unfortunately what is going on in my mind at this point in time.
Yeah, thank you. So just a few days before the election, we also have the unemployment report for October on November 1. Maybe that gives some additional input to Powell about the economy. Yeah, Mathew, now that we have another 12 minutes to go, I would like you to put across a scenario of how the markets stand, where they are positioned ahead of this event, and are we in the cusp of any new trend in the market? Precious metals have given fabulous return this year. Is it likely to continue, or is it likely to stall? And I would like to give a broader picture of all these. Thank you.
Well, again, I have a few slides that we normally do it as a monthly presentation for our advisory clients. So I'll just put that. It may be 4-5 slides, may take 4-5 minutes. I put the scenario for that, which actually I've changed a few as time went by. Markets are not pricing in those scenarios, so it becomes look like it's a binary event where suddenly things can change. And if you look at even the move index, that I think on October 7th or 8th, you had a substantial jump in the move index, which is actually pricing 1 month options of call and put options that people buy for protection. So that means 1 month from now is what is priced on October 7th, means one from month, and the volatility it jumped up by 20%. 1 month from now means that is around November 7th or 8th. So that is the time when there is a spike on volatility. So markets are pricing in something substantial around that time. Perhaps the precious markets are precious metal markets are kind of a leading indicator, canary in the coal mine kind of thing. But the other markets are clearly not. It's very complex. So I will just put these slides. I'll run it very fast. I know there's a paucity of time. I have to just. Sir, are you able to see my screen, sir?
Yes. Yes.
Yeah. So markets, considering all the kinds of things that we look at, different markets, different sets of market, if there is any kind of alignment. So when alignment comes, we are all confident with our views. But there is no clear alignment between different markets. So intra-market analysis is kind of broken. So if you look at the equity markets, clearly put-call ratios or even the positioning of the Magnificent Sevens, they're not showing that there is any kind of a panic or a market is ready for a reaction for something uncertain, some uncertainty. They all think that either of the two presidents or maybe Trump plus a divided legislature. That is the only thing that is priced as of now. It looks like that. And of course, before not only all these graphs, but we also do look at what analysts say around the weekend or during their interviews and all that. The bias is still not very clear for all other markets. Even spreads are not clear indicating, even the corporate bond spreads are not indicating any kind of panic. But the move index starts moving, which is interesting. And the biggest risk for us, perhaps, would be the concentration risk that this is having. The Trump trade is the Magnificent Seven, the Tesla is moving up, and Elon Musk is blindly supporting Trump. He even had a sweepstake where he's offering 1 million per every day for persons who would, have, I don't know what exactly means to vet what is the First and Second Amendment of the U.S. Constitution, which actually is there. So he is kind of trying to trigger up something from normal people to vote Republicans, and the swing state thing. The equity markets are not clearly pricing in. There's a heavy concentration risk. The P, all kind of historic metrics of PE ratio, whatever you be took at forward PE, whatever, it's all, and Cape Shiller ratio, all these ratios, this way above it. And because of the concentration risk and money pouring into these indices, when it reverses, they will have to unwind this. So that will create a lot of things that will affect the whole, risk appetite or risk off trades across the globe. So these are risks that we will in India will also face. So things are getting into a bit kind of tussle. And what I will quickly point out is that if there is a Republican sweep, that is president and the executive is with Trump, then we will dramatically have it will dramatically put the Fed in focus, because then the dual mandate of the Fed will have to slip from whatever they have said that they had done that cut, 50 basis point cuts in September. That will change. They will have to change, and Trump will pressure on Powell for cutting rates, that he won't be able to do it, and all that will create tension with the Fed, and that happens. Tariff hikes is again another thing. Last time in 2018, when tariff hike was there, the first initial reaction was what happened in the Chinese currency. The Chinese currency suddenly depreciated, and the corollary of that is that after the Chinese currency depreciated, you had initial. I have that graph. Can I show it, sir?
Yes.
I have another. Yes, I think. Yeah. So this is. I think this is 2018 when he put around February, March, that he had put that tariff. So it was around, I think, around 17% rate, 20% hike in tariff. It led to, I think, 10% devaluation or depreciation of the CNY. And immediately the Chinese export fell down. But that depreciation the Chinese used majestically. And see what happened later. This is of course the COVID. This red is actually the export per month. This is due to COVID. But then the depreciation of the Chinese currency, actually they used it for broadening their exports to other countries, of course, whatever. So this will have an effect on, if Chinese currency is going to weaken, then our currency will have to weaken, because our RER and all, maybe a lot of components are these. So this will have a effect on even our currency. So coming back to this, so tariff will be a big effect, and the tariff is like, he's clear that he's going to put a 10% to 20% tariff on all imports coming to America. Plus China is saying 60%, which will be gradually done by every month. He will be putting 2.5%, something like that. That is what his economic advisor is saying. So this is going to rattle the whole, risk markets. It's not going to be good. I mean, even if it is with one house, he is not going to stop it. So, and he is one person who done things which he has said he'll do. So, only thing, if Trump wins and there is no house, perhaps then Fed will continue with the higher for longer, or it is still above, the real rates are still high. So, let's say we have 2.5%, 2.25% real rates in America. So, they may continue to be higher for longer and wait till what happens, inflation effect and all, and they may do that recalibration. Democrats come, I don't think the Fed just differ from Indranil sir here. The Fed will kind of go with the kind of that recalibration that they are doing, bringing down rates. So not sure, not very clear. But there is a risk for the equity markets again. Is that what and of course, if Leena Khan continues to be US FDC secretary, what will happen is that she wants to break down Alphabet and Microsoft and Google and all, Apple and all that. So that is again a risk for the market. So that is a risk for the equity markets, but that wouldn't have any big effect on the other markets. So that is basically the gray swan and black swans we have done. And this is what this is not exactly technical, although my domain is technical. It is kind of a binary event. So things can go because the dollar index has been in a very tight band and the euro has been, forming a kind of a band where. So it's we can tell that if the binary event happens and let's say Trump with Republican or Trump with one legislature comes, there can be a bit of dollar strength. So where can dollar go in case it breaks 106, 107, 108, which is last level of resistance? So it can go to 112 and all that. It will have a big effect on China because China is trying to revive. So then suddenly another storm hits up. So you will see iron ore going down. If iron ore goes down, other base metals follows. So you'll have copper falling down below even 8,000. So all these are scenarios that can happen. So equity markets will be very happy because Trump is poised to cut tax either first to 20% and then maybe to 15% if they make in America, what is he saying? And then what comes is the rates market, where it will be very difficult. I think it will be the rates moving back to 5.5 and all. The realm of possibility is very, very high. It can topple the economy, so it will be kind of a stagflationary kind of thing. I'm not sure what exactly will happen. But as of now, a Democrat would be I think the most benign thing that India can have is a democratic government with perhaps a Republican or something. Both, of course, in the longer term, the dollar will have weakness because both of them, they're spending whatever policies they have done. It's all higher spending, higher deficit. So it's going to impact the dollar later, but not now. Now it would be business as usual if Harris comes. Harris is the best scenario for India. That is why my belief. There are, of course, I've talked to 5 people. All the 5 they want Trump to be in because he's a friend of his. So 5. So.
Okay. In the meantime, of course, we have, I think, one question here from Malik Shah from Almus. Do you expect a trust moment post-election? Particularly, he's referring to the bonds. Indranil, you want to take it? You're on mute.
I think Mathew can take it because he has indicated all the scenarios. So I would sort of rather that he takes this question up.
High possibility that we'll have a list trust movement. And one more thing is that even it can happen even before that. The list trust movement can happen in the British market. It can start with the British market even before that because 31st, I think they are having that budget thing. So that is going to be very tricky for them to balance the budget or at least give proposals to please the new electorate and do the things. It will be very tricky. So the movement will start. I think the move index movement, move index volatility will go into the UK markets on that. Plus, if Trump is going to lead and whatever, at least the popular press is kind of saying what it's Trump leading and all that, that will have it will rub into all other markets. So we can perhaps have a kind of that kind of thing. I don't know if your trust movement, he meant liability-based investing and all that. Perhaps that won't be the case in US, but the shadow bank will have stress on that in case that you'll start moving up above 5 and all that. We already had it, and the Fed somehow managed to bring it down. And luckily that Signature Bank and all that happened. That time it was less because they had holding in US Treasury. But there would be shadow banks which would be in trouble because already commercial real estate in a big trouble in US. So perhaps that would be the start of something of unraveling of kind of, that 2008 kind of crisis. Maybe not that of that scale, but perhaps that. See, risk is there. The risk is the favorite definition is risk means more things can happen than what will happen. So these things can happen. So there is a risk, there is a probability for that.
Thank you, Mathew. Yes, I think we are just on 6 p.m. and yes, I think we have had a wonderful session with both of you. Thank you, Indranil, for sharing your perspectives and insights. Great session, Mathew. I think your scenario analysis. Yes, I think as we are ending, I'll just to point out that from now on we have a lot of events lined up globally. We have Japanese election coming up on 27th, in the UK budget, the non-farm payroll. Then, of course, the election and the FOMC. Rupee, where most of our clients have their stake. One thing that really has helped is that the rupee has been continuously trading at its weakest level. RBI has not allowed rupee to strengthen even when there were hefty flows, which means that the possibility of huge volatility spike is much less. Of course, if you do have dollar rallying by 1 to 2% or 3%, we can have, but it will be not like what we have seen in either 2013 or 2018 or even 2020. I think only a black swan event can get any bigger moment in the INR. I feel market is also not complacent. As far as I can see, market is not selling much dollars. Whoever has sold had, in terms of FIs, they have bought back. So I think we are in a very interesting position overall globally. Rupee, I think, kind of prepared for the volatility. Of course, only one thing I point out is that because of RBI's action, our implied volatilities have been still very low compared to all other markets. I don't know if anything is going to happen to spike it. So with that, I leave. Thank you, Indranil, once again for joining this webinar and giving your valuable inputs.
Thank
and
you.
Mathew, thank you very much for all the inputs. Thank you very much. Thank you for all the participants for taking part. Thank you.
Thanks.
Thank you.
Bye.